Hey everyone, it's Zack Beck. Let's imagine that you could go back to March of 2020 when the pandemic began. While people were binge watching Netflix or hoarding toilet paper from the supermarkets, the global economy was in upheaval. Supply chains ground to a halt, entire industries shut down, and the stock market crashed. And if you were checking your investments during that time, you probably panicked. Even though the stock market recovered in 2020 and actually gained a little bit during that time, people are concerned that we might see a stock market crash again in 2021. And what is driving this fear is actually inflation. If you remember, the CARES Act was passed back in March of 2020, and that was a $2.1 trillion piece of legislation, and now they have passed the American Rescue Plan here in 2021, which is a $1.9 trillion piece of legislation. Now, there are direct payments going to individuals as well as unemployment benefits, helping with vaccine distribution and doing other positive things associated with these bills, but if we continue to print this money, will this inflation cause the stock market to decline over time? So what I want to do in this video is break down in detail what is going on in the stock market right now, the possibility of a crash in 2021, and most importantly, the type of mentality you or I should maintain in the present to help us make wise decisions right now that can help us achieve our long-term financial goals in the future. So let's take our time, dive into the details, and jump into it right now. You might be asking yourself, what is a stock market crash? What it is when we have a sudden and significant decline in the value of stocks, and we look at various indexes as an overall measure of how the stock market is doing. Specifically, we look at the Dow Jones Industrial Average, the S&P 500, and the NASDAQ. And if you see those ticker symbols, when you actually are looking how the stock market is doing, you'll see people say the stock market is going up or the stock market is going down. And when you actually look at it, it looks like it's crashing really quickly if you have a sudden and significant drop happening over time. And there are various examples when we've actually encountered different crashes throughout the course of history. The most famous crash that occurred in the United States would be the Great Depression back in 1929. This happened after a series of people spending a lot of money during the roaring 1920s, and then the Dow Jones Industrial actually dropped by 24.8%, and it caused a tailspin of the stock market as a whole, with people selling stocks and then banks not being able to back up and actually provide funding to people. So it actually caused a lot of issues in the economy as a whole, and it took the United States about 10 years to recover from that, and a lot of the spending that happened in the World War II actually allowed us to recover as well. Then there was the crash of 1987. This is when the stock market lost 22% of its value on one day, which was famously known as Black Monday. It took about 2 years for the stock market to regain and actually recover from that as well. Back on September 11th, we had a crash that was very significant caused by the attacks on the United States, and this caused individuals to actually sell off stocks, and we saw a sharp nosedive overall, but it took about 4 months for the stock market to recover, and generally that continued on for quite some time. The cousin of the Great Depression was actually the Great Recession that happened in 2008. This is actually largely due to the housing market, and what we saw with the housing market crash because of toxic assets and people taking out loans to purchase homes that they actually couldn't afford caused the entire stock market to really dive, and that caused us for actually a couple of years to take time to recover, but ultimately we did, and we've been on this long bull run ever since. Most recently, we had the crash that was caused by the pandemic in 2020, and we saw a very quick recovery in comparison to what happened previously because of the Federal Reserve stepping in and, like I mentioned previously, the spending associated with the CARES Act. You might be asking yourself, what causes a stock market crash? Generally speaking, what happens is when you have a dramatic decline in the value of stock prices, but simultaneously panic throughout the market. And this is the thing that we as consumers and we as investors really have the most determining factor on as well. An example we could look at outside of the stock market would actually be what I referenced earlier. You remember the great toilet paper shortage of 2020. This was a pretty crazy phenomenon, but what happened was as the pandemic began, there was this general perception that grocery stores were going to shut down, convenience stores were going to shut down, so people started hoarding things that they could, and generally they went after toilet paper, and it caused a significant supply chain issue for many people. You probably encountered that yourself, and that's basically was fueled primarily by panic, not by anything else. And that panic then caused a shortage of individuals to actually be able to find what they needed when it came to toilet paper. Similarly with the stock market, when you have people panicking and believing the sky is going to fall, people sell their shares, and then we see the stock prices go, and this just kind of becomes a snowball effect effect until someone stops it, and that generally requires government intervention, or we trip actually like a wire in the stock market itself where they make sure that trading has to be halted, which it did back at the beginning of the pandemic. And we're also going to see this happen today in our recent memory when we're seeing different stocks go down really quickly, whether that was like GameStop going up really high and then everyone panicked and it went down low, or if we even see right now with people panicking a little bit with what's going on in the tech sector, you're seeing Tesla go up from $800 now down to $600. So it's just that mentality and that shift where if we begin to panic and begin to sell, that is what can cause a stock market crash to occur. So how did the most recent crash affect the stock market? One way to understand that is basically when you actually have a drop of 20% in the stock market at a rapid pace, that basically turns into what is called a bear market. And that actually happened where we saw the stock market dip 20%. And generally speaking, what we found though is that over time, over the course of the year, we actually saw not only did the stock market recover all of its losses in 2020, it actually gained a significant amount as well. On that note, the S&P 500 gained 15.6%, the NASDAQ gained 43.7%, and the Dow Jones Industrial gained 6.6%. So it shows that it's really important for us to have a strong mentality when we're in the midst of a crash, because when you're actually seeing the stock market go down, it is very possible that it could go up. And this is why it is important to have time in the market as opposed to trying to time the market. And the reason why I say this is that if you are someone who's wanting to invest, you want to make sure that you're not just trying to make a quick buck or basically try and time the market, because you could have bought the stocks when they're at their peak and then sold when they're at their lowest. But if you had bought at any point in time and just held and continued to dollar cost average your way into the market, you would have been able to buy stocks when they're at their peak and also at their lowest, so it would average out over time. So you generally would gain money as opposed to lose money. And it has been proven historically that if you actually miss some of the key trading days over decades when you have your money sitting in the market, you actually could lose a significant amount of money over time. So if you just kind of maintain a calmness and do not panic in the midst of this, that can help you out significantly. So now to the big question, is the stock market going to crash again in 2021? I want to start by saying this: no one can accurately predict that there is going to be a crash in 2021. As I previously outlined, crashes are kind of a part of the rhythm of life and generally occur on a regular basis in the stock market. But after every crash, we've seen a simultaneous recovery. And we've seen the government be very supportive in this respect as well, where the Federal Reserve has stepped in to inject capital and liquidity into the markets. They've spent money also through the stimulus packages like I mentioned previously, and that is something that really helped to kind of stabilize things a bit as well. Also, by keeping interest rates low, it encourages people to invest money into the stock market when they cannot have money grow as much in a savings account. So in that sense, you're going to see this continue to develop over time where we might have a crash, but generally speaking, if you're calm during the midst of it, hopefully you can ride that storm and get through it on the other side in a better financial situation than you were throughout the course of it. This isn't to say that everything is going to be great, so I want to give you a few reasons why you should be cautious about the stock market in 2021, about the possibility that we might actually encounter another crash. Now, the first thing that I think for all of us to be aware of is the pandemic is not going anywhere. Clearly, vaccines are on the rise and people are actually doing everything possible to stem the tide of this, but generally speaking, this pandemic is still going to be here. There are various variants of the illness going on, so we want to be cautious about how we proceed, but generally speaking, that is an overarching thing that we need to deal with. Another thing for us to be aware of is unemployment. Although we've recovered millions of jobs since the pandemic began, there are some job losses that are probably going to be permanent as a result of this. You've probably encountered this yourself by either working remotely or having your shifts reduced or having to change your overall position, whatever it might have been for yourself. And this change in the economy is rapidly producing a new type of workforce, a new type of working model. And if you do not adapt to that, then generally you might be lost and left behind. And that could cause a lot of people to still remain unemployed even after our economy has fully recovered. Furthermore, inflation is something that we really want to be aware of. Like I said before, there were stimulus measures put into place with a lot of spending as associated with that, and those checks come at a cost. I mean, generally speaking, we cannot just print money out of thin air. That is basically what has been happening to an extent, and generally speaking, if we continue to do that, what we're doing is we're diluting the value of our dollar, and that can actually hurt us over time. So from that standpoint, that is also something we want to be cautious of, because inflation can cause us to lose the value of our dollar and also cause the stock market to dip as well. Now, make no mistake, inflation is relatively low right now, relatively speaking. Where we had the pandemic occur, inflation has remained below 2%, which is actually what the Federal Reserve is targeting. They want to keep things below 2%. However, we have seen an uptick in the consumer price index. It's at 1.3% right now, and it's projected to go to 1.7%, hopefully probably in the next month, and could exceed 2% here shortly. And the CPI is generally what the government uses as a basis for determining Social Security benefits. So that's also additional government spending. And if we exceed 2%, we're going to see the possibility of inflation occurring a little bit more rapidly than maybe even the Federal Reserve was anticipating. So it appears as though inflation is going to occur irrespective of what the Federal Reserve does. So now it's the question of whether or not this is just a temporary phenomenon that is going to be tied directly to the reopening of our economy, or if this is something that's going to persevere and actually be with us longer term, which could actually be a negative indication for the stock market as a whole. On that note, there is some good news. Papa Powell, the guy who's been printing all that money and getting you all those stimulus checks, the Federal Reserve chairman, he's indicated that he believes that this is only going to be a temporary phenomenon. He believes that we'll see inflation rise, but then peter out over time because he believes the economy is going to roar back and actually cause the stock market to go higher, as well as overall employment numbers to get back to where they were before and hopefully exceed that. So if we have some solace in that respect, we want to be encouraged a bit that Jerome Powell has said on the record that he believes we're in a positive trajectory right now, even if inflation occurs in the short term. On that positive note, I want to share a few reasons why you or I should be optimistic about the stock market going into 2021. And the first thing is this: vaccinations are on the rise. People are starting to get their vaccines, and that's really going to help the economy as a whole because there's a lot of pent-up demand for us to be able to go out and spend money at restaurants and entertainment and just being out in society as a whole. So that's a very positive development happening right now. Secondarily, older industries that were actually forced to close down are starting to open up again. Like I said, tourism is going to be impacted by this, and other industries that actually were slow as well, transportation, and that's going to cause people to maybe spend more money, which will help elevate the economy and actually bring some of those older industries back up to a better position where they were from a stock market perspective. And that's actually one thing that you should be aware of, is people have been causing this possibility of what's called a great rotation of the stock market, where everyone gravitated to more tech stocks, think Zoom and Tesla and others, during the course of the pandemic, but now they're going to gravitate more towards the traditional stocks that did well before, whether that was energy, transportation, and some of those older brick and mortar things that people might have gravitated away from during the pandemic. People are going to start investing maybe into those stocks as well. So in that sense, we do see some positive signs indicating that we might see other industries actually start to recover a bit faster. And lastly, the Federal Reserve has said they're going to keep interest rates low, and that's probably going to occur all the way through 2023 to 2024. And with lower interest rates, like I mentioned previously, you're less inclined to put your money and having it lose to inflation if you just have it in your bank account, as opposed to putting money into the stock market where it can grow over time. So if history is any indication, we're probably going to see a stock market crash at some point in time in the future, whether it's going to be in 2021, 2022, or years or decades down the line. So what are some things that you or I can do to actually navigate that type of situation? The first thing I would encourage you to do is to refuse to panic. It is so important for us to maintain a calm mentality when we're specifically making financial decisions. If you can think about the chaos that ensued with the GameStop recently, where people just drove in and spent tons of money trying to make money really quickly and then sold as soon as the stock started to crash, that is not the type of thing you want to do. You or I want to maintain a mentality of peace and calmness and kind of a tranquil approach, especially if we see the stock market begin to crash. I remember I had those visceral reactions when the stock market started to crash back in March, and I thought to myself, oh no, I need to pull money out, or I need to stop doing this. But then I paused for a moment and realized, wait a minute, as the stock market is crashing, I'm able to then buy stocks at a lower price, at a discounted rate, because ultimately they're going to gain over time. So think of it from that perspective. If you just have a setup plan initially established where you're automating your finances and automating your investments, really you shouldn't adjust anything, because you're going to miss out on opportunities to actually invest into the stock market and get stocks at a better price that will hopefully produce a better result down the line. And once again, I'm just a dude on YouTube. I don't know everything about the stock market, everything about finances, so this is not financial advice, but I just want to encourage you in the way that I've approached this. And I think if you maintain a calm mentality going through this type of situation, it will help you a lot. Now, if a crash does occur, just because you're not panicked doesn't mean that you do make some practical decisions. One thing you can always do is scale back on some discretionary spending that you might have. So maybe you stop spending money on going out to eat, you might scale back on some of your subscriptions, you might try and cut some spending wherever you can. And if you do that, that allows you to set aside some more money into your emergency fund, so that way you can still maintain money going into the market, but at least you have some peace of mind, because obviously you need to make sure that you have your food, your transportation, your shelter, and overall your utilities covered during this period of time and during any time. So as long as you have those things covered, that should help you get through an issue that occurs, whether it's a stock market crash or something else. And like I said before, you want to stick to your plan. If you automate your finances and make sure that you have a set aside money going into the stock market, you should have an emergency fund of 3 to 6 months of your living expenses set aside. And then hopefully you're just following the general principles that can help you make wise decisions on an ongoing basis. That would be cutting spending, saving money where you can, avoiding lifestyle inflation, avoiding debt, and like I said previously, investing into index funds into the stock market that hopefully will provide you with the types of results you want long term. And if you're doing that, irrespective of if the stock market is good or the stock market is bad, I believe you're going to be able to achieve your goals long term. And that's really what we're striving for, because as Dave Ramsey says, the only people who get hurt on a roller coaster are those who get off in the middle of the ride. So don't be one of those people. Go for the ride. It'll be exciting, a bit exhilarating. It might be a bit scary at certain times, but hopefully at the end of the day, when you're at a point in time when you actually want to take that money and use it to either buy a home, go on great vacations, or do something that is meaningful to you to be able to retire with dignity, whatever it is, I hope that you're able to do so because you've been able to remain calm and consistent in your plan and committed to the objectives that you're pursuing. And the most important step you can take to help navigate a crash is to boost the like button for the YouTube algorithm. I'm just kidding, but if you wouldn't mind, please hit the like button. That would actually help the channel out a lot and help push this video to people who might need to hear it. But you really want to do everything you can in the midst of an economic environment that might be a little bit uncertain, to do everything you can just to remain calm, committed to your plan, and you'll be able to achieve your goals. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. That would help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf, and help you make wise decisions in the present that can help you achieve your goals long term in the future. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that hopefully makes a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.